Today is Monday, December 3rd, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. Today's guests are Steve Freed, Vice President of Grain Research at ADMIS, and Alan Bush, ADM Investor Services Senior Financial Economist. Alan, let's start with the financials this morning. Starting with the stocks, which are seeing a strong rally this morning. Why the rally?
Well, of course, we had the apparent truce announced between the U.S. and China at the G20 summit in Argentina. In fact, we gapped higher, substantially higher. So there's more optimism on the trade situation. The question is, does the art of the deal beat the art of war? Apparently it's too soon yet, but progress is being made. Investors very much like that tone, and that has helped the indices to trade sharply higher today.
Last week, Powell, one of the Fed people, spoke and talked about being a bit more dovish, in regard to interest rate hikes. That started this rally, would you say?
It absolutely did, and that was one main impediment to the rally, was the Fed being very aggressive in raising rates and their planned rate hikes for next year. And so that being somewhat mitigated with Powell's dovish comments from last week, and now a better tone to the trade situation. So a lot of the problems are being either resolved or hopefully on the way to being resolved that have limited strength in the stock indices as of late. Technically
speaking, there's a double top at the 2814 to 2818 area in the S&P. What is the rule of thumb concerning double top formations?
Well, double top patterns and triple top patterns. In fact, you could almost say there's a triple top pattern in the S&P if you take in the previous high. But the rule of thumb is that these double and triple tops often accumulate stops, in this case buy stops. So that would tell me that the stops will probably be hit. The rule of thumb generally is the market goes to where the double top is or triple top. Higher prices are likely. So I would think that this double top pattern will only hold temporarily and that it will be penetrated to the upside.
Gold futures rallied over $35 since November 13th. Do you think this market will continue to rally?
I absolutely do think it will continue to rally. And if the less hawkish Fed plays a part, which I think it will, that should limit gains in the dollar index. And of course, a less hawkish Fed and less strength in a dollar, or even topping dollar, that would equate, I believe, to more inflation as far as the gold market is concerned. And of course, one of the main influences on the precious metals is the level of the dollar. So if the dollar cannot continue to advance as it has, that is a very bullish development for the precious metals.
So-called trade war ceasefire that we're having right now, what type of effect does that have on interest rates, and will it affect what the Fed does with interest rates moving forward?
A better trade situation, in theory, would mean a stronger economy. But don't forget, this is a long way off. It's a 90-day ceasefire. So I think it's more or less a status quo. Nothing really will change, or at least it won't get a lot worse. The trends that we're seeing now will remain intact. That means the global economy will probably continue to slow. Interest rates around the world will, I think, remain relatively low as well. So probably higher prices for the interest rate futures markets. I would continue to buy breaks, especially at the long end. It means higher gold prices. It also means higher stock index futures prices.
Yeah, I think it's safe to say that there's nothing settled here. This is just a ceasefire, and where we go after this is probably the most important thing. Steve, let's talk about the grain markets and how they're reacting to the U.S. and China trade war, or trade truce news. What should farmers do? Will China buy more U.S. products because of this? What will happen if there's no deal in the next 90 days?
I think the first thing, we just saw some tweets coming from the president saying that he thought this was an incredible breakthrough and a big leap forward for relationships between the United States and China. We also saw something out of China saying that the buyers there need to see the tariffs reduced on U.S. soybeans before they can come in and buy U.S. soybeans. I think right now the commercials feel that China will come in and buy about 180 million bushels of U.S. beans, old crop and new crop. We'll see if the government buys it and gets a subsidy for the tariffs, or if they actually reduce the tariffs. And then I think that the next thing they'll do is probably buy hogs because of the swine fever. It looks like the thing continues to spread, and it's a problem for them, and that they probably need hogs. We're not sure about like corn products, and sorghum, but I think the market right now today is up. Some people are a little disappointed that it isn't higher. If China was to come in, or if we see some reduction in the tariffs. I think that in 90 days, there is some concern that the U.S. Trade Representative says that China has to do a lot to get to the point in which they would reduce the tariffs. So in 90 days, if they haven't done a lot, then the U.S. will add tariffs to the existing tariffs and impose additional tariffs on the ones that aren't, and that would be bearish to the grains. Farmers, right now we're telling them to sell cash. Take advantage of this rally in all soybeans, corn, and wheat, and sell cash, whether it's stuff they have in storage, the 19 crop, and even some people, when we're at close to 980 on the November 2020 contract, to sell some beans out in 2020.
Whether there's a trade deal or no trade deal, any rally, I suppose, is good for farmers. However, I think it's safe to say that there's still a lot of corn and a lot of beans out there.
Yeah, I think that in general, the farmers did sell early when we had $10 beans and $4 corn before the May announcement of the tariffs. But they still have a considerable amount, especially corn, to sell. They were selling some on Friday. I think they're selling some today. But in general, they're bullish beans. They think that this is one step towards a reduction in tariffs, and they want to sell beans higher than they are now. So they're willing to hold on to it. And in the West, the basis is so wide, $2 under, in which the farmer probably there is not willing to sell beans, even in a 18-cent rally.
So what happens in 90 days if more rhetoric comes out and there is no deal?
Prices go down. And so I don't know exactly how far it goes down, but on top of the potential of no deal, you've got a really good South American crop out there. You've got the perception that in 2019, globally all crops, corn, beans, and wheat, will be up from 2018, which will add to the carryouts, which should be bearish prices. So again, the trade war is the most important thing, but once that's behind us, whether we have a deal or not, higher crops in 2019 would be bearish.
You mentioned South America. What's going on with the weather down there in the growing regions?
Early on, we had some too much rain in Argentina. It's drying out, so the conditions there are extremely favorable for crops. The political issues in Argentina is something that we just don't know exactly how many acres will get planted. In Brazil, it's too wet in the northern areas, but they have planted the crops down there 2 weeks ahead of normal, and that's one of the things that kind of offsets a deal for U.S. and China, is that Brazil might be harvesting beans as early as January. And so you've got a pretty narrow window here in which, unless the government forced crushers to buy U.S. beans, in which they actually need to buy U.S. beans. Southern Brazil is starting to dry out a little bit, and so we're going to have to watch that a little bit to make sure that they get timely rains. But all in all, everyone's expecting right now record South American crops.
Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.